It's almost 10:21, but it's important to map what global investors are doing and what global investors are indicating to their, what the local funds are doing and what local investors are doing with their allocation. So on a monthly basis, we analyze what's in, what's out with our knowledge partner Morningstar, and Kaustubh Belapurkar is back. He's Director Fund Research with Morningstar. Kaustubh, good to have you back. Thank you for joining us.
Thanks for having me.
So what's this inside story?
So I think some interesting trends. Some of the usual suspects that have managers have been buying for some time and they continue to do so. So a couple of the private banks, ICICI, HDFC, which are the largest holdings, and I think are just getting more and more buying conviction from managers. The other trend, and in fact, which Mahesh was just talking to earlier about on the HFC space. So you see HDFC, again, a large holding, and has been you're seeing adding positions through the months by some of the managers. Some of the new names that kind of cropped up this month, some interesting plays. So one is Bharat Electronics, that has been bought by a couple of managers. Essentially, strong order book, and they're really looking at, in fact, I was just looking at, in terms of, they are one of the largest manufacturers of EVM, so that might be an interesting play that's coming in. So that's one of the buys that the new buys really, so to say, from the managers. The other one is, I think, a play on GST, where Container Corp, where a couple of managers have increased position
Finally.
In this. Oh, absolutely.
Finally.
So, yeah. So that's some of the stocks that have really gained steam, on the large cap space.
Where are you seeing outflows? Where are people profit taking? So what's out now?
Yeah. So I think one theme that's remained common is, technology as a sector has, people have been constantly reducing, and it's actually come down by almost 300 basis points on an aggregate exposure basis for the industry over the last 1 year. So this month is no different. Wipro and TCS, you saw some selling on those counters, but beyond that, you've seen some selling in Coal India, where that's where couple of large asset managers have sold that. Cipla, again, pharma's stocks also have been, seeing reduction in exposure, and Cipla was one of those casualties in that sense, where we saw some selling exposure. And the last one was actually an interesting play, which is more of a profit booking move, is on Ratnakar Bank, where post IPO, obviously, the stock has really moved up, and there's been some profit being taken off the table on that counter.
Which is one small cap stock, and I don't consider BL a small cap. I mean, it's a $3-4 billion company.
Yes.
Which is one small cap stock which has seen maximum new piled up or new position build up by funds.
Yeah. So in fact, I think we were talking about that earlier in the show, is actually Dalmia Bharat. That's an interesting play that we've seen a fair bit of addition in the previous month, and actually, fortunately, unfortunately for the there was a large block that KKR
sold out,
offloaded, and a couple of asset managers could get into that kind of space and bought almost 300 crores of that in their portfolios. The other names, some of the usual suspects again, Tata Chemicals, Max Financial Services continue. The one new name that's come in is again a GST play, All Cargo, where again we've seen one of the private equity players, that's Blackstone, exiting All Cargo, and a couple of managers getting into that space.
So is there any trend that you're picking up besides the fact that IT is a complete underweight, or is it still a very individual stock specific story?
No, I think there's certainly definite trends that are sort of emerging. So financials, the conviction is just growing, and that's really been taking up a lot of action from the manager, and that allocation has certainly gone up over the last 1 year. Metals again has seen a lot of buying, and really seen clearly those allocations going up in that sense. Pharma and IT are the ones that clearly people have been pruning exposure in that sense.
Are there any schemes where redemptions have started?
Luckily, no. In fact, if you look at it, I think flows have been incredible. If you look at just since Demon, we've received close to, I think, about
4,500 on a monthly basis, but that's only SIP.
That's only SIP. So if you look at April, it was about 10,000 crores in mutual funds, and equity sort of balanced funds, which is an incredible amount. And that money, so I mean, it's about 76,000 crores in the last 6 months. So it's clearly outpaced foreign institutional investors in that sense. And the good part is that whenever the market's correcting, we are actually seeing signs of investors putting in more money rather than pulling out, which has been the case in the past.
What are the cash levels like?
The cash levels have inched up, certainly, just because the valuations are high, so managers are taking that time to just cherry pick stocks, and obviously the flows have been so strong that they'll need some time, but on an aggregate basis, it's about 6% for the industry.
One Hurdon Street number which I got, couple of days ago was that mutual fund industry or domestic mutual fund industry is sitting on cash levels which are at a record high. Albeit the size has also gone up.
Yes.
But is my herd on street right?
No, completely. So on an absolute number basis, that is true. But like you rightly said, the equity assets have more than doubled over the last couple of years.
So what's that cash number?
So it's 6% as an overall aggregate basis. I don't remember the exact absolute
60,
number.
70,000.
I think it's not that much. It's
Not
about
that much.
29,000-30,000 crores would be the number.
So purely in terms of what money is chasing right now, do you think it's going to continue to be the mid and the small caps which are going to lead the large caps? And also for the market to move higher from here, what sector do you think is going to be taking the lead?
So in fact, if you look at the way the managers have been running their strategies for the last year or so, they've been very conservative in allocating a lot of money to mid and small caps. While money's been flowing into these funds, they've definitely taken a very, very stock-specific approach. Obviously, the stocks have completely moved beyond anyone's expectation, but I think they've actually been looking more at large caps where relatively the valuations were better. So wherever they had the leeway to move into large caps, they've actually been doing that.
I'll take my chances with this one. If the number of stocks which currently are owned by mutual funds are, let's say, 100, has that number increased, decreased? What's the trend like in last 2 or 3 months?
It has definitely increased. I mean, the one good thing is that there are some attractive IPOs that have come in, and managers have definitely been looking at that to add positions. So I think that, and especially in the small and mid cap space, because just the way the money's been coming in, you have to start looking at new counters, and they've definitely been adding new stocks month on month.
Reliance, I would say, has been one of the critical drivers of the last lap of the rally. Are funds continuing to chase Reliance, or are they moving out of Reliance now and moving towards other names, like an L&T perhaps?
Yes. So actually, a good question. So Reliance was bought sometime early in the year, and when that first price move happened, they profit booked. And they've actually been marginally reducing positions in Reliance. L&T is something that's actually been gaining a lot of traction, and it's kind of inching up in terms of the holdings. If you just look at aggregate holdings,
very steadily,
absolutely.
6,000 stocks, 10 hard questions, and you could answer for all. Is it memory or too much of analysis?
I think it's just a bit of both.
That's his job.
Good to have you on the show. Appreciate your time.
Thank you so
much. Thank you for
Thanks
joining us. That's it on this edition of First Trades. Thank you for tuning in, and thank you for watching the show.